This is a second version of transaction number 2, the second transaction on the list. For this transaction, you're going to order inventory on account. So we read the transaction and we see that there's information about the units that we're going to order. We see information about the vendor and freight carrier, and then we're told which documents and which flowcharts to use. So gather all the documents. You'll have the new purchase order. You'll have a copy of an old purchase order so you can get an example of how to fill this document out, and then you'll have the price list, which includes the cost or the price that you pay, and then your selling price, the higher price. So we get the documents out and then find the flow chart. This kind of transaction is a purchase, obviously, so we'll look for a purchase flow chart. We're told that it's on page 22, and when we look, we can see that it must be the first flow chart on page 22, which is preparing a purchase order. We look through the flow chart before we begin and see that there are two processes that we're going to be accomplishing there. We're going to first prepare a pre-numbered purchase order, and then the purchase order will be approved by Ray Kramer. It's Nancy Ford preparing the purchase order, so you notice and think, oh, that's a control. It's important for the manager to approve this purchase order before it goes out because Nancy's in charge of the shipping and receiving, and no one else knows when she purchases things because she does the receiving. So this is an important control in this cycle. Okay, so you begin by preparing the pre-numbered purchase order, take the purchase order and fill in all the information provided, looking at the cost on the cost list. That'll take a while. So pause, and when you've completed that, then you're ready to have the approval process completed. You'll notice on the previous document that Ray Kramer signed as the purchasing agent. That's a little confusing because Nancy's the purchasing agent. So you could either have Nancy sign and Ray initial, or you can have Ray sign, as was done on the sample purchase order. When you're finished, you see that one copy is mailed to the supplier, who's an outsider for this organization, and the other copy is filed temporarily. We don't do anything else right now, we're finished, but later for this company, they don't record the transaction, the purchase, until they actually receive the goods. That's when it'll hit the accounting record. So we'll see that later on in the transaction list. In the third transaction, we will get a check from the bank for a loan that we're issuing. We're borrowing $70,000, it says, from First American Bank by issuing a note payable. The documents that we need are the check from the bank, the promissory note, and then later we'll also need the cash receipts pre-list, so you can pull that out now. This is part of the financing cycle, and we're receiving cash. It tells us to look at the flow chart on page 21. When we go to page 21, we see that for the receipt of cash, there are a number of different processes that we engage in. First, we will restrictively endorse the check, then we'll enter the check on the cash receipts pre-list, and then, if appropriate, we'll make an entry in the the cash receipts journal. So we look at the flow chart, look it over, we get all the documents that we need, and then we start the transaction. In the first step, it says restrictively endorse the check. On the blue transaction list, it tells us what that means. We turn it over and we write, for deposit only, Warren Sports Supply. You'll notice there's a comment out to the side. Right now we're acting as Jim Adams when we're receiving this check and endorsing it. But Adams is assisted here by Ford. That's a control procedure, and the reason for that is because cash is so sensitive. It's so easy to steal, so we normally have two people controlling cash when we receive it. In this case, in the flow chart, it mentions a customer purchase order. Because this isn't involved with a purchase, we won't have that document. Now we enter the cash on the cash receipts pre-list. When you look at the pre-list, you'll see a lot of examples of cash that was received for customer purchases. But in this case, we're receiving it for a loan, and so we won't have an invoice number and we won't have an invoice amount. We'll record the check on December 16th from First American Bank, and we'll make a check mark in the other column, indicating that this is not a cash sale or a collection on account. The check number was 545. Oh no, I'm sorry. Yeah, check number was 545. The amount was $70,000. We'll record that. We don't put the check mark in on the side. We never put the check marks in unless we're told to. That check mark will be relating to another control procedure that comes in later. Okay. Finally, we make an entry in the cash receipts journal, and then, if appropriate, we'll make an entry to the accounts receivable subsidiary ledger. Here, this is not a receipt on an account, so all we need to do is record the payment in the cash receipts journal. We pull that out. It's the blue journal. We find the cash receipts journal, and we record the entry. In our cash receipts journal, in the first available space, we list December 16th, First American Bank. We don't put a control initial there because that's for when we do a control procedure. The debit will be cash for $70,000 because we received cash, but the credit won't be on an accounts receivable, and it's not a cash sale, so we can't use the AR section and we can't use the sales section. This transaction is an unusual transaction, and it's recorded in the other column. We'll use account number 21000, notes payable, for this transaction. So we record that account number, 21000, and we'll record the amount of the check there, $70,000. The check mark to the right is for when we post at the end of the month. That's something to keep in mind. When we post, we make sure that we post each of the column totals for columns that have an account number with them. So for example, the cash column has an account number with it, 101. So we total the entire column at the end of the month and post that to cash. We don't post anything to the general ledger during the month, but at the end of the month, we total each column and post it to the appropriate account. So cash will get posted to 10100, sales discount gets posted to 30300, but the other GL column actually is a variety of different accounts. So each item in that other GL column will be posted individually. So the column at the far right is to make a check mark when you've posted all of those. Doing that will ensure that the debits equal to credits after you've posted the entire cash receipts journal. Now for a normal transaction, we could stop here and we put the pre-list in a temporary file until the end of the day. But because it's our last transaction on the 16th, we'll go on. We'll take that check and we'll prepare a bank deposit slip to deposit that check. So we take out a white deposit slip, fill it out, and then we'll attach it to the check and send it to the bank. So it'll go in our banking documents file.